I should have a good understanding of cryptocurrencies as I began mining Bitcoin in January of 2014. After the cost of ASICs became prohibitive, I shifted my focus to mining Ethereum until their transition to proof of stake. And what mining does, in a nutshell, is validate and process transactions on a blockchain network, which is essentially a public ledger that records a chronological chain of transactions. Miners are essential to the Bitcoin network. Without miners, there simply is no Bitcoin. And when the last miner shuts off the lights, which is what happens when it's no longer profitable, Bitcoin dies, unless the validation protocol changes. It's quite simple, really. It's not that complicated. I say that because people by and large have lost trust in crypto. And once you lose trust in a currency, it's no longer useful as either money or a store of value. There are still true believers that say we're the problem and we just don't understand Bitcoin. The only thing that's needed is a little education. Nowadays, I'm done with mining. Most people have moved on. They're done with crypto. It was an easy way to make fast money, which now seems to be a thing of the past. Most weren't really believers. It was just a scheme to turn a profit, especially those that lost a lot of money on both the crash in prices and failure of exchanges like FTX and BlockFi. Crypto assets can quickly go to zero. Everything can be gone after returning from a 2-week vacation. What's my take on crypto, and how do I feel about gold? It's easy. Bitcoin is pixie dust, while gold represents tangible asset you hold in your hands, and its value would just continue its trend higher as the US dollar gradually diminishes. Cryptocurrency exchanges are currently facing increased regulatory scrutiny in the US. One notable case involves the SEC filing charges against Binance, accusing the platform and its owner of engaging in deceptive and illegal practices. Binance is specifically accused of commingling billions of dollars of customer assets. As a result, the platform has temporarily suspended new dollar deposits and may impose further restrictions on withdrawals, all while denying any wrongdoing. The cryptocurrency industry has been grappling with scams and financial malpractice, which has led to concerns among investors. Now, two major players in the space, Binance and Coinbase, find themselves in the crosshairs of the Biden administration. In light of recent fraud schemes involving Samuel Bankman-Fried at FTX, some investors actually welcome regulatory crackdowns. They believe that such actions can help weed out fraudulent practices and bring stability to the market. However, there are apprehensions among some individuals who fear that government intervention may serve as a pretext for launching a central bank digital currency. This move could be seen as a step toward a cashless society, where all transactions would be monitored and subject to approval by the Federal Reserve. While these developments unfold, it is worth noting that investors who hold privately issued digital currencies, such as Bitcoin, may want to ensure that they are not exposing themselves to excessive counterparty risk. The SEC has made it clear that it considers all cryptocurrency exchanges to be operating in violation of securities laws. In contrast, individuals who hold tangible assets like physical precious metals, such as gold, have a relatively safer and more reliable means of preserving their wealth. Unlike digital assets, gold has a long-standing reputation as a store of value and a hedge against economic uncertainties. Investors who choose to hold physical gold need not worry about their wealth evaporating digitally. However, they should still take necessary precautions to ensure the security of their physical holdings against physical threats. It's crucial to exercise caution when considering exchange-traded products, pooled accounts, or other indirect forms of precious metals ownership that involve multiple layers of counterparty risk. Instead, holding physical bullion outside of banking and brokerage systems can provide a more secure way to preserve wealth. When entrusting precious metals to a third-party vault, investors must ensure that their specific holdings are segregated and never commingled with those of the vaulting firm or other clients. While the cryptocurrency industry undergoes regulatory challenges, physical gold remains an enduring and sound option for those seeking a safer means to preserve their wealth. Its long-established history and tangible nature make it a reliable asset in times of economic uncertainty.